No, it's a little bit of a sigh of relief going into a weekend, especially with the volume that we're expecting on the close today. So hopefully we can maintain it. We do see a change in the leadership group over the last couple days. So that's an encouraging sign, because if tech starts to rally, oil rallies, and maybe we get the financials to go with it after the stress test, maybe we can get some real, wind behind the sails here for the market.
What do you think, Oliver?
Yeah, I agree with that. I mean, there's a lot of pressure on the market, geopolitical events. We've all been reading the tweets and seeing what's going on. You've got higher oil prices. So ending on a positive note is psychologically important. I don't think it's about whether it's 8 days down or 9 days down. I don't pay much attention to that. But ending a Friday on a positive note tends to be an important thing.
Positive note as well, Rick, in terms of the data out of Europe, which is rare, I guess, or has been rare recently, and that allowed some of the European risk assets to rally as well.
Yeah, and there has been some good data points, but in my mind, there definitely is a slowing there, and we could debate as to the extent of that slowing. What really caught my eye in general was the fact that bond yields settled off about 6.5 basis points on the week, widening the spread with treasuries to within a basis point of the widest since 1989. That is really significant, especially at a time where we're trying to handicap the difference between our speed and the speed of Europe and the rest of the world. I continue to think that this is going to be something that haunts Europe. It's going to affect many markets, and especially what's going on in Italy. Now, granted, their 10-year's not at 3%, but it's getting a little crazy, and it's not far away. And when that acts up, it tends to affect the high credit spreads. For instance, if bond yields trade under 30, it's almost going to be impossible not to see our curve drag down a bit. And I think these issues are quite important when you have a Fed rightly looking at the positives of the U.S. economy, wanting to tighten it up, but the unintended consequences of how all that fits together is going to be confusing. I mean, we're basically unchanged on the weekend. 2s, 10s, 30s, and even the dollar index. It's only off 1/4 cent. It's hovering at 94.5. It closed around 94.75 last week.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.